Good afternoon, everyone, and welcome to this edition of the Wyoming Women's Business Center's webinar series. Today's topic is managing cash flow in uncertain times. We thank you for joining us. My name is Waldo Smith. I am the Director of Microlending for the Women's Business Center, located here in Laramie, and we certainly appreciate you joining us for this presentation. Today, I'm going to tell you a little bit about the WWBC and how we can be of assistance to you. We'll talk about our topic, managing cash flow in uncertain times, and then I'll provide contact information for our staff so that if you have a need, you can follow up and visit with us. Our mission at the Wyoming Women's Business Center is to promote equality in Wyoming through successful business ownership. We do this in a variety of ways with several different programs. We provide business training and counseling. We provide access to capital through our microloan program and our individual development account match savings program. We provide professional artist development through our Works of Wyoming. And we recently launched our COVID-19 support program to assist women-owned businesses across the state. We are designed to offer business owners the assistance they need in whatever areas of business management or finance that they should find they struggle. We do offer business services, planning and counseling, networking opportunities, and access to capital, as I've mentioned. Our primary focus is helping businesses with their business plans. We can help you develop this along with projections. If you are looking at applying for a loan, whether with our organization or other lenders, a strong business plan is vital and very, very important in helping you. Even if you're not looking for financing, a business plan can assist you, and so that we can provide help in developing those and also in marketing or financial bookkeeping plans and helping organize those. The networking and education opportunities we have offered in the past included roundtables in Cheyenne, Casper, and Laramie. We have discontinued those for the time being because of a shelter in place. So we have moved mainly to an online webinar training. We hope to get back to the in-person events in the near future. We do remind you that their YouTube channel for the Wyoming Women's Business Center does contain previous webinars that have been recorded and uploaded, and please view those, and you can also find links to that site on our webpage. The Access to Capital program provides small business loans to businesses within the state who are unable to get credit at other locations or other entities. We do not compete with banks for credit, so if you can obtain a financing through your local bank, we defer to them. However, if your bank is unable to assist you, you can give us a call and we can sure take a look at things. I am the contact person for that program, so you can give me a call or email me at any time. This is me. I've been with the organization for 6 years. I come with a background in banking, so my specialty or area of expertise is in finance. And today we're going to talk about our topic of managing cash flow in uncertain times. I know all businesses with the closure that took place in late March, early April, have been struggling or have experienced cash flow challenges. Unfortunately, a lot of the tips that I'm going to talk about today really work best in advance. It's better to plan ahead and be prepared for a situation like this than it is to try to work through it when the time comes. However, certain strategies we talk about today can be implemented at this time, and should certainly be looked at to see how your business could benefit from it. To start off with, it's best to define what a cash flow is for those of you who aren't familiar with finance. Basically, it is a measure of the money that's come in versus the money that's gone out of your business over a certain period of time. To do this, you take a look first at your beginning cash balance. Usually, I recommend you do this on a monthly basis. You can do it on a weekly basis, quarterly, semi-annually, annually, whatever period you choose. You start with your bank balance and your cash balance as of that reference point. Then you look at all of the money that has come into your account during that time through sales, through receipts, collection of accounts receivable, income of other sources, everything that's come in. You take a look at the money that's gone out, that you've paid through the account in the form of expenses, and then look at your ending cash balance. Your bank statement is a good picture of this. You can see the deposits you've made. You see the checks that you've written out of the account or transfers you've made out. And if your beginning balance is less than what your ending balance results in being, then you've got a positive cash flow. If your ending balance is less than your beginning balance, then you had a negative cash flow. A good example of this, and I'm just going to use my personal example. You can use this in a household situation as well as a business. But say that I start with a balance of $100 in my checking account or my bank account at the beginning, as of June 1. I receive my paycheck, which is $500, deposited in the account, and then I write checks out of that to pay my rent, to buy groceries, to pay my utilities. At the end of the month, I've spent $450. So if I start with 100, add 500, subtract out 450, my ending cash balance is $150. I have a positive cash flow for this month because my ending balance ends up being more than my beginning balance was. And so let's take a look at an example of a cash flow spreadsheet. This is a document that I provide to a lot of the loan applicants that we receive. It's a simple spreadsheet. It's got monthly periods, month 1, month 2, month 3, so forth. It's got income, an estimated column, and an actual column. What I recommend people do is take this spreadsheet and do a projection forward for the coming 12 months. And then as you go through each month, you can input the actual figures and use it as a comparison. In this case, month 1, we've got a beginning cash balance of 0. We have cash income during the month of $17,600. We pay out expenses for repairs, for fuel. This is kind of a trucking business. Insurance, $400. Interest, $250. And we take out a withdrawal of $3,333 for owner's withdrawal. And we have principal comes out of $833 during the month. So our cash inflow is the $17,000. Our cash outflow is the $983, leaving $7,717 ending balance. That's carried forward into month 2, and yeah, that's your beginning balance for that month. As you can see, if you look at this, your income is going to vary from month to month. Typically, your expenses will vary from month to month, and there may be months when you get down to this cash position and it's a negative figure. That means for that particular month you had more outflow than you had inflow, and you are short of being able to cover all of your expenses. This type of projection can help you see, or report can help you see seasonality in your business. They can help you anticipate times when you are short on cash and you may need to go to the bank and take out a short-term loan or inject some cash from another source. So it's a good tool to use. If you're interested in obtaining a copy of this, you can get in touch with me after this presentation. So here are some things to keep in mind when you're working with your cash flow. Positive cash flow does not mean necessarily that your business is profitable. Cash flow and profit are two different things. The goal is to have both a positive cash flow, meaning you've got more money coming in than you've got going out, and that you're profitable at the same time, that you are not losing equity in or net worth in any way. You can be profitable and not have cash. I've seen a lot of businesses that are getting started, or they're expanding, and so they're spending money on additional inventory or equipment, and they may be making money, but they are cash poor. Farming is a good example of this. Most farmers or ranchers typically market their products 1 or 2 times a year instead of throughout the year as regularly. And so during most of the year, they have a negative cash flow. They're spending money, but they don't have anything coming in. And at the end of the year, when they sell their cattle or their crops, the money comes in and they're able to repay things. And if they're lucky, they've made a profit. You can also have cash flow but not be profitable. What do I mean by that? Well, you may have cash coming in, but if you're reducing inventory and you're actually losing an asset or reducing assets, which generates cash, but if you're reducing them at a discount or a loss, then that means at the end of the year you may not be profitable. An example of this from my experience was a small car dealership that I helped finance. He came in at the end of the year and said, my accountant says I made money, I have to pay tax, or my accountant says I have to pay taxes, so I must have made money. But when we really dug deep and looked, he had reduced his car inventory significantly. And so yes, because of the sales, he had to recognize that cash income and pay income tax on it, but his net worth was significantly less at the end of the year than it was at the beginning of the year due to the reduced inventory. And in actuality, he had lost money over that 12-month period. So as we turn to our topic, our main topic today, how do you manage cash flow? There are 4 things I really think you should keep in mind and work on as you look at these issues. These 4 items are from an article by Brian Hamilton, 6 action steps to take in the next 90 days to save your business. This was in Inc. magazine here a while back. I'm only going to touch on 4 of the steps. But the first one is pivot your product or services to meet the new conditions. I know when people were told to stay home, a lot of restaurant owners were probably thinking, what are we going to do? If people can't come in and eat in our restaurant, how are we going to pay our staff? How are we going to pay our bills, rent and utilities and things? And what a lot of them did was offer delivery or curbside pickup. They did have to reduce staff because they didn't need as many waitresses and waiters, but they were able to keep kitchen staff on hand. Maybe they used their own delivery service or used Uber Eats or something like that, but they were able to continue to operate, maybe on a smaller scale, during the time when they could not open their doors to customers. Another example is a customer of ours that makes vests for backcountry expeditions. These particular items have a lot of pockets in them and are very handy for hiking and snowboarding, that sort of thing. When the pandemic hit, she saw a need for face masks, so rather than continuing to sew vests and build an inventory, she switched and started sewing face masks and advertising on her webpage. There was one particular material that was so popular that within 3 days she had to post on her webpage that she was sold out because she really couldn't produce enough fast enough to meet all the orders that were coming in. Well, that's one way of pivoting to meet your situation. The second action step is to get back to the basics. And the most important one is monomaniacal customer service. The best customer you can have for your business is a repeat customer and a customer that will go and tell someone else as well. So if you're not providing excellent customer service now, you need to start and make that a priority. If your customers aren't satisfied, then some of the other action steps I'm going to mention will not be effective for you. The third action to take is to preserve cash where you can or generate cash. There's the old adage that cash is king. And if you have a stockpile or a reserve of cash, you're able to withstand most situations or react to situations in a productive way or a positive way. If you're scrambling for cash, then you're adding additional pressure on yourself. The final action step, and we offered a webinar on this a couple of weeks ago, said vigorously control what you can and vigorously ignore what you cannot control. Sit down and take a look at all that's going on within your business and ask yourself, is there something I can do about this? If there is, start brainstorming what steps you need to take. If there isn't anything at all possible you can do, then you need to ignore that, put it behind you and not dwell on it, not come back to it. It's like worrying about something that may never happen or it can't be helped. I've heard said that worry is interest you pay on debt that may never come due in the future. And so you can put your energy to better use productively within your business rather than wasting time worrying about things you can't control. So now we're going to take a look at 9 steps, 9 tips for a better cash flow or things that you can do. And again, this comes from an article I found online by Ann Eichenberg called Tips for Better Cash Flow in Your Business. There were a number of items in this article, and I'm only looking at 9 of them. This probably isn't really relevant at this point in time for most of your businesses, but you should take a look at when it's advantageous to lease things and when it's better to buy things. For example, if you've got, say you've got a lawn care business or a landscaping business, and you're looking at 3 months of heavy commercial lawn care that you need to do, but it's only 3-month period. Does it make sense to go out and spend the cash to buy an industrial lawnmower or would you be better off leasing one for 3 months? If you've got an office that you're doing service out of, is it better to lease a printer, photocopier, or combination machine over a period of time, or should you spend the cash to buy one? There are advantages in both ways depending on your situation, but remember that leasing is an expense, and so you do have to pay out of pocket for those payments. On the other hand, buying is a larger expense up front, and you're reducing your cash. So if you're trying to maintain a cash reserve, it might be better to lease an item rather than try to buy it. Number 2 is make a habit of shopping around for better prices for the things that you purchase. Now, I am a strong believer in shopping locally. I do believe in supporting your fellow businesses within your community, and I would really recommend that you purchase from a local vendor every opportunity you get. But there may come time when it's cheaper to buy things from someone outside of your community, or what you need may not be available in your community. In that case, you need to go and find the lowest price you can for your inputs. It doesn't hurt to shop around. You may come back to your current vendor, but check prices out. The important thing to keep in mind is you want to maintain the quality that you're purchasing so that your customers don't suffer. And if you're changing vendors, be aware that there could be shipping delays or inventory shortages dealing with this new vendor. So you have to weigh those factors. Consider increasing the prices of the products or services that you offer. This one is a tricky thing. You can do this step at this time if your customer service is up to adequate standard. If you have a good customer base who is loyal to your business, you can take steps to increase prices. There's a lot of ways of doing this. You can incrementally over a period of time increase. You can offer say you have a package of 10 items for $100, and you want to take it up to 120. And if you think you're going to have pushback on that, then you can offer, say, packages of 5 items for $70 rather than 10 at 120, or packages of 7 items at $90 or $85. Offer lower volumes at prices that do increase what you've been receiving previous to that. But don't increase your prices unless you do have good customer satisfaction, because prices without improvement aren't going to help you out in the long run. The best way to control cash, if you have a lot of accounts receivables, if you don't require cash up front or cash at time of purchase, then you can invoice faster to get paid faster. A lot of companies wait till the 10th of the month to send out their bills. I would recommend you look at sending out the bill the day or the night after the product is delivered or the service is performed. So say you're mowing lawns, have a lawn care service and you mow lawn today, instead of waiting till next Tuesday to send out bills or the first of next month, send the invoice out this afternoon or this evening as you're finishing business. Hand it to them as they leave. that would entice them to pay you sooner, get cash in your hand, in your account, so that you can pay bills when they come due. Another thing you can do here is if you do bill on a certain time of the month, or even if you're sending bills out, you can entice them to pay sooner by offering a discount if paid within 10 days or 15 days, and then full price if they wait the full 30 days. A lot of people will utilize your cash to fund their operation if you let them. But if you give them enough incentive to pay you sooner, that will benefit you. Okay, incentivize customers to pay you sooner. I just talked about that, offering a discount if they pay quicker. Devise a new campaign to boost sales. Coming up with a gimmick, offering something to add to a sale is an incentive that you can use to increase cash flow coming in. For example, if you are a marketing person, you could offer a free logo design with the creation of a website. You may charge $50 to do a logo design, but $2,000 to build a website for someone. You know, if you can generate a website design by offering a free logo, you're $1,950 ahead of the game rather than just doing a logo for them. Coca-Cola did this a couple of years ago. They came out with a Share a Coke campaign in which they printed names on the labels of their cans and their bottles, with the thought that if you're buying a Coke for yourself, you happen to see your friend's name on the bottle next to yours, and you're going to be seeing that friend later, you'll buy that bottle as well and share it with them because it has their name on it. These are campaigns that you can use to boost sales. There are a lot of others. If you want to see a longer list of items that can be done, you can get in touch with me and I can share that with you. But I would highly recommend that you do start producing cash flow statements for your business on a regular basis and review them, or go back and review the past ones you have. You may find that they provide you with a lot more information, such as your business may be more seasonal than you thought. And looking at that information and the way your cash typically comes in and out can help you plan better so that you're more prepared for the lower inflow times and seasons of your year. Now, if you remember my picture, I'm of the older generation. I'm not as up to date on technology as a lot of people are, and you may be in the same situation as me. But if you leverage modern technology, this can help increase efficiencies within your business, thereby creating more time, more productive time for you, and hopefully cost efficiencies so that you are more profitable going forward. And more profit equals more cash in your pocket at the end of the day. And as you're doing this, remember again that cash is different than profits. Pay real close attention to your cash receivables or accounts receivables and manage those. Don't let them continue to grow. You want to keep accounts receivables as low as possible because you don't want people living at your expense. You want to be able to control your own destiny and your own finances. So this has just been a quick overview. There are a lot more areas of this topic than we would have time for to discuss today. So I'm going to end there. I do want to thank the following entities for being partners with us and enabling us to provide these sort of webinars, these trainings to you. We thank the Wyoming Business Council, the U.S. Small Business Administration, and the U.S. Department of Agriculture for the funding they provide to our business center. This is our contact information of our full-time staff. If you have questions or comments, please send those to me. If you have questions on our microloan program, you can get in touch with me. If you need assistance with developing a business plan or have questions on marketing, on bookkeeping, whatever it might be, you can contact one of us, and if we can't answer the question, we can direct you to the individual who can. Do thank you for your time today and listening. This is a re-recording of the broadcast that we did yesterday, and we had audio difficulties, so this has been presented again for your convenience. Again, if you have questions, please feel free to contact us, and we'd like to thank you for joining us in this discussion of this topic. Good luck to you, and we hope you continue to be successful here with your business in the state of Wyoming.